Well, we're going to get rolling again here this week, and it's another week of weather markets. But the one thing we need to remember is we're also getting another week closer, to getting the crop in the bin, and I think that's especially true, when you look at the corn crop, as we're pushing past the 50% point on pollination throughout the country. Well, this week we're just kind of go through a grab bag of different things, from some inflation markets to world markets, and then as we get through pollination in here, we like to put where we think a final corn yield could be at, or start throwing some estimates out there. So, we're going to get rolling here this week. The first chart I have for you is the August crude oil chart. As you can see, since the beginning of the year, we've been on a strong uptrend, and since January, we're just below $50 a barrel, peaking out just above 75 on this August contract. But now here this week, we broke below the 50-day moving average with yesterday's big meltdown as OPEC announced they're going to be increasing production. We think we need to really pay attention to this crude oil market, because if agricultural commodities are going to rally based off of inflation, they really need to be led by the energy sector. This chart here gives us a little bit of warning in here this week. The next one we wanted to show you is lumber, and we've highlighted the lumber market this past spring when we had the big rally, but now prices have pulled back. In front of us is September lumber futures, and as you can see, around the beginning of the year, we had futures around $500, and then futures more than tripled by the early part of May, putting a high in over $1,500. But now here in July, we're back to $500. Okay, again, when we're hyping up inflation in the markets back in the spring of the year, this lumber market was one that really pointed a picture. Okay, now that picture on inflation has really turned the other way. We just think these things need to be kept in mind, as our belief is that inflation talk has supported the grain markets specifically. As we look towards the world markets, here's a palm oil chart, and we've had a big rally on palm oils. It just made new contract highs overnight. It has been led up also by the canola market, which has been strong, but the bull market argument is that, hey, we've got world vegetable oil prices rallying, and this is evident when you look at the palm oil market on how that has performed. The next one we want to show you is Minneapolis wheat. The crop issues up in the northern plains and the Canadian prairie are well advertised. And here over the past week, we got above the 2017 highs and are trading at the highest level since the drought year of 2012, when it peaked out just shy of $10.50 a bushel. Again, if we're looking at the bull markets out there right now, you got to point towards palm oil or canola or Minneapolis wheat. Those are the ones that kind of have the bull story with it. Now, when we get over to the corn market, I just want to show you something here that's a big concern to us. This top chart we have on here is a weekly Chinese corn futures. And here today, front month Chinese corn futures close at their lowest level since December. That's that horizontal red line. If we look on the bottom chart in here right now, that's weekly U.S. corn futures. That same second week of December, we got highlighted with the red line below, and we had these corn futures around $4.40 a bushel there. So when you compare where Chinese futures are trading at today and looking where they were back in December, and you look at U.S. corn futures, this corn market looks a little bit overvalued if we're truly following what went on in the Chinese market. You need to remember it was a Chinese market that led us higher. When you go back to May and June of 2020, you can see the Chinese market was moving higher into the month of July, while the U.S. market trended lower. It was a stronger Chinese market that pulled U.S. corn futures higher, as U.S. corn was the cheapest on the world market and China was an active buyer. Sitting here right now, U.S. corn is not the cheapest on the world market. Just like, or on the opposite side, where that Minneapolis wheat chart and the palm oil chart gave us some optimism here, when you look at the Chinese corn futures market, we're a bit concerned. When I look over at new crop Chinese corn futures, they're trading at their lowest level, okay, since this last December. In fact, the new crop November contract is basically at their contract low. If you compare that to U.S. corn futures sitting right now around $5.60 a bushel, back in the beginning of the year, we're trading the $4.25 to $4.50 level. We're not sitting here saying that the U.S. corn market's going down to $4.25 or $4.50. But if you were a believer last fall and over the winter markets that Chinese demand carried the U.S. market higher and that's why we had a bull market. These figures right now need to be a little bit of a concern to you. At least they are to us, because as we look at this market in here right now, and you call these corn in the 550 to 570 range over the last week and a half, it seems to us we got a better chance of going down closer to $5 than this market to go above 6. Now we're going to switch on to yield, and like we mentioned earlier, as we get to pollination, we try to put more of a yield estimate out, and currently the USDA has a forecast yield of 179.5 bushels an acre, which would be an all-time high. Over the last 30 years, we've had 8 years where, we've had 8 years where we've had a new record yield. Okay, the biggest percent increase was in 2004, where that year's record was more than 12% above the previous record, and the smallest increase was 2017, where the yield was only 1.26% above the previous. So when you look at this chart in here right now, it shows us that when we do make new record highs on yield, it can increase anywhere from just over 1% to over a 12% from previous record if all things click. So what does this mean for this year's corn crop? Well, when we look at this year's corn crop and where we're at in the previous all-time high, if we have a 1.26% increase, it's going to project a national average yield of 179. The average increase over the previous 8 years was around 4.38%. That would project a yield of 184.5. And if we happen to have a 2004 type yield, that projects almost a yield of like 199 bushels an acre. We don't think that's realistic in here, a 199 corn. But on the other hand, we don't think the USDA is too far off at 179.5. And then you've got to determine, now, is this crop growing from that, or is it getting smaller? Now, if we're going to place our bet in here on a corn yield, and if we've got to put a number out there right now, and we prefer using ranges, is we think that the final corn yield is going to be between 180 and 185 bushels an acre. Okay, where we're coming up with the big yield from is we are listening to our producers. Okay, and our producers through a lot of areas of the Midwest are telling us that they believe they have really large yield potential. It seems like the market is putting a lot of focus in here on what the crops are like in the Dakotas or in the Northern Plains. Like I had a producer the other day mention to me from South Dakota, he's like, in years past, it seems like what the crop's like in South Dakota doesn't matter at all. And now this year, the market just wants to focus on what it's like in South Dakota and North Dakota. And when you talk to guys in South Dakota, they all say, well, man, our crop's hanging in there. It looks pretty decent. When you get to North Dakota, it gets a lot worse. It seems to us that the crop issues out there are getting a little more overhyped, but overall there's a pretty good crop. But having stated that, it seems like producers are on edge in here right now and really want this crop to finish out, because last year as we headed into August, there was a lot of optimism on the corn yield, but then we had a very hard August, and that derecho storm system that moved through Iowa wiped out hundreds of millions of bushels of corn. So, we still don't have this corn crop in the bin, but there is a fair amount of potential out there. Okay, we don't think the USDA is that far off on saying it's at 179.5. As we move towards August and we get closer to this crop being in the bin, we think that this yield has got to get bumped up a little bit higher. Another thing we just want to quickly discuss in here, and this came up from conversations this week with producers, is looking at the corn-bean ratio and where that's sitting at. And so what we did here on the chart on the left is where we're sitting at the beginning of 2021. We had November soybeans at 11.12. We had East corn at 4.35. That had a bean-corn ratio of 2.56, okay? When you look at where we're sitting at here today, looking ahead to 2022, we've got 22 beans at 12.65, 22 corn at $5. That ratio is at 2.53. We'd like to bring this up right now, okay? Because as we look ahead, it seems to us either Nov 22 beans are too high or Dees 22 corn is too cheap. Producers have notified us that the cost of fertilizer has gone up substantially. We had one producer give us a specific figure that from booking fertilizer ahead in July of 2020 compared to what it would cost them to book ahead this year right now is about $180 an acre. At 190 bushel APH, that's nearly $1 bushel increase in cost of fertilizer alone from raising the 21 to the 22 crop. Okay, that's fertilizer alone. That's not assuming that seed's going to stay the same or chemical costs or equipment costs right there. So when you're looking at the massive increase of cost of raising corn, and yet that corn-bean ratio is fairly similar to where the market started out at the beginning of the year, we can make the argument that either beans are priced too high or new crop corn is too low. I know this is a long ways in advance and everyone's focused on this year's crop, but that's something that we need to start paying attention to as well. Now, as we wrap up here today, I just, and I don't want to make anyone mad with these comments. I just kind of want to go out there some generalizations on some things we're picking up and kind of wanted to end this. I think what is happening, my take right now is that I think this corn crop is a lot bigger than the media is presenting. Okay, and I really believe that because the media likes to focus on the plane crashes out there, not where the planes land every single day. Okay, and as we visit with producers, and again, a lot of producers are on the edge because they have the potential for a good year, okay, and would really like it to finish out, but the crop yield potential is there. I had a producer the other day make the comment to me, as in the beginning of the year, I'm hoping for 200 bushel corn and penciling out $4 and thinking I can get $800 an acre. And right now, the way my crop looks, and if it can finish strong, maybe I can end up with 240 or 250 corn, and all of a sudden you look at $5 corn, you're grossing out $1,200 an acre. I mean, that's a 50% increase than what they would have projected, back in January. Those kind of numbers and wanting this thing to finish out in a good way. Okay, I mean, I can see why guys are really on edge. Granted, not everyone thinks their corn crop can be like that. That's just what I've had, one producer story that stuck in my mind. Again, though, I can go into an area of the country where they're hoping for 180 bushel corn, and now they're thinking all that they're going to get is 140 also. I do have those stories out there. When it comes to the bean side of it, there's just way too much uncertainty regarding bean yields. I mean, I'm confident that the corn crop is getting bigger. I just have no strong feeling on what's going on in beans. When I get over to the bullish market this year is Minneapolis wheat. I can't say it in here today as we made new contract highs, even though we're trading a little bit weaker right now. But it seems like we may be getting to the point where the crop issues are getting fully priced into the market. Okay, you go back to an 88 drought or a 2012 drought rally, the markets, okay, peaked out before the weather started turning. That's something we need to keep in mind looking at Minneapolis wheat. I think the one thing that has changed a lot over the last even 2, 3, 4 years is social media. I think social media is having much more influence on prices than we've ever seen before. Okay, I mean, I'll just take some rain events that we've had through Illinois or Indiana where areas have gotten deluged by 5, 8, 10 inches of rain over a couple of days. And it seems like those pictures on social media of some crops getting flooded out make it look like an entire area is that way. I think we need to be a little bit cautious on what social media is presenting because, again, it is pointing towards the problem areas. If my hunch on the corn crop is getting bigger is correct, that tells me that more corn will get sold off the combine in here in the fall of the year than what people would expect. Okay, I just don't see guys willing to pay commercial storage on $5 cash corn. The other thing to keep in mind is it seems to us that this corn and bean market are really following these seasonal trends in here this year, especially corn. And that's, again, a kind of a warning flag to us. Seasonally, this corn market tends to be weak in the month of August. Again, if you have any questions, feel free to drop us an email or give us a call. We look forward to seeing you here next Tuesday. Have a great day.